Studies from regulators show 70 to 90% of retail traders lose everything. This isn't a guess. It's a cold, hard statistical fact. But what if I told you that the minority who consistently win aren't smarter, luckier, or faster than you? They just follow a simple 5-step blueprint. A blueprint designed to filter out the garbage trades and help them zero in on only the A-plus setups. Today, I'm giving you that exact blueprint for free. We're going to dissect a single trade I took on pocket option. A near perfect setup that locked in an 85% payout. This isn't about luck. It's a repeatable system. Pay close attention. The number one reason traders fail is painfully simple. They are glued to the 1-minute chart. It's like trying to read a novel by looking at a single letter. You get completely lost in the market noise and become easy prey. A winning trade never starts on that 1-minute chart. It starts with a bird's eye view of the entire battlefield. For this trade, the asset was euro to US dollar. Why? Because it's one of the world's most liquid pairs. More liquidity means smoother price action. It means the chart is less likely to have random vicious gaps. Checkpoint number 1. Trade a clean, predictable asset. My entire strategy begins with multi-timeframe analysis. Since this trade had a 2-minute expiration, I first opened the 5-minute M5 chart to find the real trend. This is where I identify the dominant underlying market direction. On the M5 chart, I look for the dance between two moving averages, the 50-period and the 200-period moving averages. When the short-term MA crosses above the long-term MA, it's a buy signal. In this case, the 50 MA was flying high above the 200. This is the market screaming uptrend right at you. The price was carving out clear higher highs and higher lows. Checkpoint number 2, a healthy, obvious trend. I have one unbreakable rule. Never fight the main trend. If that M5 chart looked choppy or sideways, I would have closed the chart and walked away instantly. Patience isn't just a virtue in trading, it's what pays you. Did you know that markets only trend about 30% of the time? The other 70% is just sideways chop designed to steal your money. Your job is not to trade all day, it's to find and catch that 30%. With the uptrend confirmed, I then dropped to the 1-minute chart. This is my execution time frame. This is where I hunt for an entry. I'm no longer looking for the trend. We already have our bias. Now I'm looking for the perfect moment to enter with that trend. On the M1 chart, I saw the price pulling back from its recent high, heading down toward a very specific and critical area. An area that was strong resistance just a few candles ago. This is where old resistance might flip and become new support. This is where we stop thinking and we start watching. That pullback on the 1-minute chart is our opportunity. But remember, an opportunity is not a signal to trade. Just because the price is falling inside a larger uptrend does not mean that you should immediately click the buy button. That's a classic amateur mistake called catching a falling knife. We must let the market prove it's ready to climb again. As the price came down and touched that old resistance level, it slammed on the brakes and immediately started to stall. It stopped falling and just hovered sideways for a few minutes. This is the market taking a deep breath before its next move. It's also the exact moment where impatient traders get destroyed. They either jump in too early, trying to predict the absolute bottom, or they panic, thinking the entire trend is about to reverse. I do not make a move until I have a triple confirmation. The first confirmation clue came from the price action itself. After consolidating for 3 minutes, a huge, powerful bullish candle exploded upwards. It completely swallowed the small bearish candle before it. This powerful pattern is known as a bullish engulfing candle. It's the market showing a violent rejection of all lower prices. It's a clear visual cue that buyers have stormed back into control. But I never trust just one signal, even one this strong. I need my indicators to confirm what the price is telling me. Which brings me to my favorite indicator, the RSI. But here's the secret. Most traders use the RSI completely wrong. They are desperately looking for overbought or oversold signals. That's the textbook way, and it's often misleading. The pros use it to measure something else, the market's momentum. I use the 50 line as a dynamic midline for the trend. As the price pulled back, the RSI dipped towards that 50 line. Then, at the exact moment that bullish candle formed, the RSI bounced hard off the 55 mark and shot upwards. It wasn't overbought. It was re-energized and ready to run. It confirmed that bullish momentum was taken over again. Do you trust the candles or do you trust the math? In that moment, they were both screaming the same thing, buy. So let us review our 3 green lights for entry. First, The price action perfectly respected our key support level. Second, a powerful bullish engulfing candle showed buyers were in control. Third, the RSI confirmed that bullish momentum was returning. This is the moment of truth where it all comes together. The best analysis in the world means nothing if you fumble your entry. With my triple confirmation shining bright, I entered a call trade. My entry was at the precise close of that bullish confirmation candle. I waited for the 1 minute candle to close. Entering while a candle is still forming is not trading. It's pure gambling on what you hope would happen. We only trade what the market has already confirmed. Next, the most critical decision in any binary trade, the expiration time. Why did I choose exactly 2 minutes? There's a rule of thumb. Set it for 2 to 3 times your candle time frame. That explosive candle and the sharp RSI bounce screamed that a sudden burst of momentum was imminent. A 1 minute expiration would have been far too tight. One tiny price wiggle could have stopped you out. 2 minutes was a sweet spot. Enough time to ride the wave, but not so long we get exposed to noise. Finally, and most importantly, let's talk about risk. The market doesn't care about your analysis. Any trade, even a perfect A+ setup like this one, still has a random chance of failing spectacularly. For this trade, I risked exactly 1% of my account balance. This is the golden rule that separates professionals from gamblers. No matter how perfect the setup looks, you never risk a big chunk of your capital. On pocket option, the payout for this trade was 85%. With an 85% payout, you need to win over 54% of your trades just to break even. That's why hunting for only these high probability setups is the only game worth playing. The trade was placed. For the next 120 seconds, I didn't touch a single thing. You must have absolute unshakable faith in your system. The price did exactly what all the signals had predicted. It surged upward in a powerful and immediate move. The result, a clean win and an $85 profit on a $100 position. But honestly, the money is the least important part here. The real lesson is in the repeatable, disciplined process. So the trade won, but what if it had lost? The shocking truth is, my process would not change at all. I would follow the exact same checklist on the very next trade. Let's recap the full anatomy of this perfect trade. This is the 5-step code that separates the winners from the losers. Step 1, get the big picture on the higher time frame. Step 2, pinpoint the key battleground support and resistance level. Step 3, patiently wait for a confluence of confirmation signals. Step 4, choose an expiration that matches the signal's momentum. Step 5, obey the golden rule of risking only 1% of your capital. This checklist is your shield against emotional trading mistakes. Now, I must be brutally honest. Binary options are an extremely high-risk instrument. In many regions like the UK and the European Union, they are banned for retail traders. This is because the potential to lose your money is incredibly high. Platforms like Pocket Option are not regulated by major authorities like the FCA or SEC. This means you are accepting a higher level of platform risk from the start. And for those who are serious about mastering this system, I've made a free perfect trade checklist PDF just for you. It outlines the entire 5-step system we covered today. You can get it by joining my free Telegram group. The link is right down there in the description below.